my guess is the economy will start to get worse and worse, which will then force the hand of the Fed. So even if we're at, let's say, 2.5% inflation, if you all of a sudden see 10% unemployment, the Fed will feel forced to act at that point, and then you'll get some sort of stimulus going again. The only problem is it starts the merry-go-round again, where you have then higher inflation coming in over the next few years. So, I mean, this is one of those things where it's like a drug addict. When you get addicted to it, it's very hard to get off the juice, if you will. And that's what the economy's facing now.
Gareth Soloway, the president, CEO, and chief market strategist of In the Money Stocks, anticipates a substantial downturn in the stock market during an economic recession. Gareth foresees a recession looming in the near future. He also shares his perspective on the precious metals market, expressing optimism towards gold, which he believes could triple in value within the next 5 years. According to Gareth, for a few years now, we've been experiencing inflation, and it appears that the Fed is hesitant to resort to printing money. However, if things deteriorate significantly, they may have no choice but to print money to encourage economic growth. The individual expressing this view anticipates a major recession that will last longer than what most people are anticipating. The Federal Reserve has decided to maintain the current interest rates with the possibility of slight tightening. However, they are not expected to reduce rates unless there is a severe and extensive recession. The effective federal funds rate is at 4.57%, compared to 4.57% the previous market day and 0.08% last year. This is lower than the long-term average of 4.6%. If you want to stay updated with the latest news and discussions, hit the subscribe button and ring the notification bell to get notified of our new videos. Let's listen to Gareth's perspective on this matter.
Fact is that we've been kind of addicted to Federal Reserve quantitative easing for a long period of time, right? So the market has not really experienced a recession in basically almost, 15 years. And what that does is it makes the market not know how to deal with a slowdown without Federal Reserve printing. And so my fear is that as we see the economy slow down due to higher interest rates, and we now have the Fed funds rate around 5%, you're going to start to see a recession kicking in probably in the second half of this year. And the kicker is going to be that inflation is unlikely to get back below 2%. It might get close. It may be 3%, 2.5%. But if the Fed won't come out and print right away, how does the economy find its way out of a recession? It doesn't know how to anymore. In fact, you could argue that the Fed has broken the underlying ability for the economy to get out of a recession. So I think that's where I'm looking at it from that kind of vantage point. And I do think that that's the likely scenario here. We're facing, it's not going to be like a depression. I don't foresee that in the next couple of years. It's more like going to be a tough economy that's going to last for years.
According to Gareth Soloway, he strongly believes that gold will be a top-performing asset this year. He also stated that the U.S. Federal Reserve will only consider reducing interest rates if there is a severe and extensive recession. He said, "I still think gold will be the best performer this year." Soloway, the financial analyst, is not the only one who anticipates a surge in gold prices this year. According to a report by Bitcoin.com News during the first week of 2023, several experts predict a substantial increase in the value of gold. Let's hear Gareth's perspective on why he thinks that gold will perform well.
So let's take a look at the gold chart, because I think it is a fascinating chart. So we know that gold was the best performer between the S&P 500 and Bitcoin in 2022. And right now it's having a very solid year. It's not outpacing the S&P or Bitcoin yet, but my guess is it ultimately will by year end. And what we can see here is you had this beautiful rally up. You broke out above this area here on the gold daily chart. You continued up, and then we pulled back. And notice where the pullback took us. It took us right to the previous pivot point. And that's a picture perfect chart setup, right? So basically, this was where I was looking to accumulate gold again, and that's exactly what I did. Now, again, what we've seen is a 4 or 5 day move up. Now you're getting a pause day. But looking at the bigger picture, for me, when I look at this bigger move, I am expecting gold to retrace to the all-time highs around 2070. And actually, by year end, I'd be somewhat surprised if we're not through that level. So I do see upside here. Absolutely. I continue to be a big bull on gold, mainly because it offers protection in an uncertain economy, but it also offers an inflation hedge, right? So if the economy spins into recession and inflation comes down, you also have the positives of gold. Or if inflation stays high and the economy still ramps up, you still have that side of gold as well. So it's kind of like a good side on either in either case of the economic situation. Yeah, and I think the biggest thing with gold, right, is its performance during this period, right? I mean, we went from basically zero interest rates to about 5% on the 10-year, or excuse me, 4% on the 10-year, but Fed funds again pushing north of that level, obviously. So what we've seen is gold has held up amazingly well in spite of high interest rates. And if interest rates are getting near a peak, then you actually should see gold actually perform very, very well. And assuming at some point, like I do, that even if it takes 6 to 12 months for them to lower rates a little bit, that's going to kick in even more interest in gold. And I think there's this feeling now where, people are a little bit more shaky on crypto. We don't know the regulations. We know Silvergate recently, FTX, like these other things where you had Bitcoin as an obvious alternative to gold. It's not so obvious right now. And it's pushing a lot of money towards the gold market as well, as again, people are saying, hey, listen, what's the good trusty safety hedge here? And that remains gold. So I really do think that's the key. A down dollar would be good for gold. Interest rates topping out would be good for gold, even if they don't get lowered. All of those things, again, should be a positive for the yellow metal.
Additionally, Gareth suggests that silver has the potential to rise in value over the next 12 months. However, he warns that the market for silver can be highly volatile. Gareth personally believes that 2023 could be a breakout year for silver. The precious metals market has become more volatile as both gold and silver have ceased their bullish trend due to a stronger dollar and a shift towards the risk-on approach in stocks.
That's for sure. And it certainly has percentage-wise, no doubt about it. So we've seen, again, same kind of thing. It rolled over sharply here. We did hit this little area of support. It's having a little bit of a down day today. I could see silver having a little bit more downside where we go to retrace to this longer-term trend line here, which would be around the 1930 level on silver. But I think ultimately, if you have this kind of bigger picture than just the next month or so, you continue to view the fact is inflation will remain elevated. We've seen, it's so interesting. We saw recently over the last month, people getting very excited inflation was coming down. And then just in the last couple of weeks, PCE numbers came in a little bit hotter and people are now saying, wait a minute, maybe it's not coming in as quickly. So I think, again, this is going to be something that's persistent. I don't see us going below 2% inflation for probably years. And I think that's going to make for the metals overall to have very, very good upside. Now, the only kicker with silver is that it's industrial as well as a store of safety and inflation hedge. So you have to just be ready for more volatility with silver.
Despite a gain of more than 40% so far in 2023 and an increase of over 38% in the past 30 days, Soloway pointed out that Bitcoin is still down more than 65% from its all-time high. Referring to Bitcoin's recent increase, Soloway said it's a nice bounce, but he firmly believes that Bitcoin is still in an overall downtrend. He also said, I would dare say that without the Fed's printing of money, Bitcoin is headed towards $12,000 to $13,000 and maybe as low as $9,000.
I'm bullish on Ethereum and Bitcoin. I'm undecided on ones like Solana and Cardano. I do think they'll probably survive, but it's hard to gauge exactly how they do in the longer term. But I do think, for instance, Bitcoin longer term, very, very bullish still. Now, in the near term, though, it's important to recognize that I still see further downside. So I've been a bear since 69,000. There's bounces along the way. We've seen one of the great bear market rallies here. But what we can see here is you almost have that same M top that formed when we were at the all-time highs. Like if we go back to this chart, look at that same sort of chart pattern, which is exactly what we just created on a very smaller scale. So the question now is, we had a bear flag here. It broke down. And now we're making another bear flag. And my guess is we are headed back to 18,000 and change probably in the next month or so. So I do think you have downside on it. I still have a lower target. I still don't think Bitcoin has fully bottomed out in this cycle. And I still think that, again, too many people are bullish on Bitcoin and crypto. Like as soon as it pops, a million people come out on Twitter all like, this is the new bull cycle. Bear markets, if you look back at 99 to 2000, when the bull market ended in .coms, or in 2007, when the bear markets followed and finally ended, no one dared be bullish. And that's not happening in crypto yet. People are still too eager to jump on the bull bandwagon. So for me, that's a dead-on signal to be really careful with crypto over the next couple months, as we could see lower lows. That FTX's collapse could be a longer-term positive for Bitcoin, but I think it spurred the onset of regulation that's coming a lot faster. I think if FTX didn't happen, if Celsius didn't happen, if you had nothing going on shady in crypto, then there'd be less push to regulate it because people, investors in crypto, wouldn't be up in arms that they're losing money left and right. And I think ultimately for the health of cryptocurrency and the sector, you have to have transparency and regulation and all these things. So in a weird way, it's almost like a longer term positive, even though it causes short term pain.
Gareth Soloway has expressed his belief that a prolonged recession is on the horizon, with elevated interest rates expected to persist for some time. He also anticipates that gold will be a top-performing asset this year, and the U.S. Federal Reserve will only consider reducing interest rates in the event of a severe and extensive recession. What are your thoughts on Gareth Soloway's predictions for gold and cryptocurrencies in 2023? Do you agree or disagree with his outlook, and why? Please share your opinions in the comments section below. If you found this video informative, please give it a thumbs up. Don't forget to subscribe to our channel to stay informed on the latest news and videos. Thank you, and we'll see you in the next one.